Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the top 10 best stocks to buy and hold forever, and in this particular video, we're going to be discussing dividend stocks. So we're going to be going over the best dividend stocks to buy and hold forever right now so you can achieve passive income, which is going to be paramount for your wealth building journey, because if we can acquire assets that generate us passive income or any type of cash flow, especially during times of market volatility and downtrends, this is going to be absolutely crucial to building our wealth. So for more videos like this one, remember to go and smash that like button right now, comment your favorite dividend stock down below, subscribe if you are new, and without further ado, let's jump right into today's stories. I also want to mention that Webull, which is a brokerage platform similar to Robinhood, where you can buy and sell stocks as well as cryptocurrencies, is going to give you 6 free stocks, and if you click the link in the description box down below and you invest $100 into any stock of your choice. I personally would always invest into ticker symbol VOO, which is an ETF that tracks the S&P 500 index. And if you do this, you are not only going to receive 6 free stocks on top of being automatically entered in to win $12,000. Go and click that link in the description box down below, and I wish you the best of luck. But here, back to the video, I want to focus on a 2013 white paper by Goldman Sachs that's titled Why Dividend Growth Matters. And in essence, it showed that the annual return of dividend stocks in a given portfolio was around 9.6% compared to the returns of the S&P 500, which were around 7.1% at that time. Additionally, it goes on to say that the volatility of the former, referring to the dividend stocks in the dividend portfolio, was around 16.2%, while the volatility in the S&P 500 index was around 18%. Clearly, this means that the dividend portfolio had less volatility, and with less volatility, it reduces your overall risk of losses, which is something that dividend stocks are absolutely phenomenal about doing, especially if you have drip investing on, to where if you receive a dividend stock, you use that dividend to automatically reinvest that dividend back into that same stock so your next dividend is even greater. Also, I want to point out that the data shows that from 1926 all the way till 2010, it's been noted that 85 to 90% of the S&P 500 index's growth and returns were due to dividend stocks alone within that particular index. So adding dividends to your portfolio is going to be very advantageous for you. Now, for me personally, I am more of a growth stock investor, but I do have solid blue chip dividend stocks in my portfolio as well as ETFs. So during times of market volatility, which we find ourselves in right now, my portfolio not only is not downtrending as aggressively as the overall market and other people's portfolios, but I'm also using these dividends to reinvest back into that same stock so my next dividend is greater, and this also lowers my overall risk because it lowers the volatility of my internal portfolio. So it's really a win-win. So in this video, we're going to highlight the top 10 best dividend stocks to buy and hold forever. Clearly, not everyone's favorite dividend stocks are going to be in this list, so if you want, go and comment down below right now your favorite dividend stocks. And so without further ado, let's just jump right in with our first dividend stock, which is going to be a stock that I'm a huge fan of, which is the Procter Gamble company, ticker symbol PG. Right now, the current stock price for the PG stock is around $147, while analysts have price targets for the next 12 months for this particular company that range anywhere from $124 all the way up to $185, and they have a decent dividend of around 2.4 for their dividend yield. If you didn't know, Procter & Gamble is a giant when it comes to consumer staples. They are actually the company behind very large consumer brands such as Gillette and Pampers. They also tend to raise their dividends consecutively 4 years on end. So for the past 65 years, they have actually had a dividend increase, which makes them not only a dividend king and a dividend aristocrat, but it also makes them a phenomenal investing opportunity, because not only is the stock price going to appreciate over time, their dividend yield is also going to increase year over year, and we know this because it's increased over the last 65 years, to the point where even Deutsche Bank analysts have a buy rating on the Procter & Gamble stock right now, which to me is a no-brainer to add to your portfolio to not only add stability, but also give you some passive income along the way. The company is also very strong financially because in the fiscal second quarter of 2022, they beat estimates for their earnings per share by 1 cent, which doesn't sound like a lot, but remember, it's earnings per share. So this represents far more than just 1 single cent. Also, their revenues are phenomenal. They brought in for that particular quarter around $20.9 billion, which beat their estimates and their projections by around $617.4 million. Moving right along to our next stock, it's going to be none other than Johnson & Johnson, and this is another blue chip stable company that offers a strong dividend. The current J&J stock price is hovering around $179 per share, with the 12-month analyst price targets ranging anywhere from $173 to $215, with the dividend yield being around 2.36. And Johnson & Johnson is a major healthcare company that has been in operation for over 100 years. It offers very popular medical products such as Tylenol and Band-Aids. The company also has an amazing dividend growth history because it has increased their dividends around 59 years in a row, to where analysts from Bernstein actually hold an outperform rating for the J&J stock. Their earnings per share came in very strong for the fourth quarter of 2021, bringing in $2.10 per share, which is absolutely amazing. And again, similar to Procter Gamble, the company beat their estimates by 1 cent per share. Their revenues are also very strong. For that exact same quarter, they brought in around $2.48 billion, which did beat their previous projections by analysts because they were only supposed to bring in $23.3 billion, but clearly they outperformed and exceeded analysts' expectations. The next company I really like is Cisco Systems, ticker symbol CSCO, and currently the stock trades for around $45 per share, where analysts think that the company is worth somewhere between $40 and $73. So $40 on the low end and $73 over on the high end, and they have a very impressive dividend yield of 3.31. And Cisco Systems is a company that is really involved in technology. They are an enterprise computing company that dominates the technology sector. They have also raised their dividend very aggressively over the past decade, to where Wells Fargo analysts actually hold an equal weight rating for Cisco Systems. They also announced a considerable dividend increase of 3% alongside an additional $15 billion share buyback program. So right now, their dividends are going to bring in around 38 cents per share, and they are going to start being payable to shareholders on April 27th. So overall, this is a phenomenal company and very bullish and positive news for Cisco Systems. Next, I can't talk about dividend stocks without talking about one of the best dividend stocks on the market, which is the Coca-Cola company, ticker symbol KO. The current stock price for the KO stock is around $64 per share, and analysts believe this company is worth anywhere between $58 to $76 on the high end. The dividend yield for the company is around 2.64, and of course, you probably know that the Coca-Cola company offers a range of non-alcoholic beverages to consumers around the world. This would include things like juices and teas and sports drinks like Powerade and even Smart Water. The company has raised its dividends for the last 59 years, and according to Evercore ISI analysts, they reiterate their bullish prediction for the company by giving it an outperform rating. So overall, this is a phenomenal company. They also increased their quarterly dividend by a whopping 5%, bringing the dividend to 44 cents per share, which is absolutely staggering. The company also announced that it expects to resume their share repurchasing program this year, with net repurchases reaching around $500 million for the year of 2022. Also, I want to add that this is one of Warren Buffett's favorite all-time companies. Next, we're going to move over to JPMorgan Chase & Co., ticker symbol JPM, and this is one of the companies that I absolutely love. The current stock price for JPM trades for close to $130 per share, while analysts disagree on this company, while the low-end analyst price prediction is $120, while the high-end analyst price target is $200 for the next 12 months. This company also has a very impressive dividend yield of around 3, and JPMorgan Chase is a gigantic financial company that offers very various financial services and financial products to their consumers, and they also offer wealth management services. The company has raised its dividend over the last 9 years consecutively, and clearly analysts believe this is a phenomenal time to buy JP Morgan, particularly if we consult UBS analysts. The company has had a very strong earnings per share, revenue growth, and dividend growth, so there's really no reason why investors shouldn't add this to their portfolio to be a fundamental and foundational company, not only for the growth aspects but also for the very impressive dividend. I also want to say that Intel Corporation, which is our next company, also offers very good growth paired with a very strong dividend yield. For instance, the INTC stock trades for around $44 per share, while analysts radically disagree on what this company is truly worth, because analysts think this company is worth anywhere between $37 to $74 in the next 12 months. The dividend yield is very high in my opinion, coming in at 3.24, which is very good not only for growth investors, but also dividend investors. So this is going to be a growth stock that also has somewhat low volatility if you decide to reinvest these dividends over the long term by enabling drip investing if your brokerage actually allows that. Intel Corporation is a multinational technology company that is very well known for making processors for computers, and they also offer a plethora of other tech-related products. They have also increased and raised its dividend over the past 19 years. So this is absolutely phenomenal news, and it's a company that I myself am very bullish on, not only from a dividend standpoint, but also from a growth standpoint. Next, we have another company, and it's going to be an energy company named Clearway Energy Inc., ticker symbol CWEN.A. And currently this company is trading below what analysts actually think the company is worth, because currently the stock price is only $32, while analysts think it's worth at least $35 on the low end, and it's maximally worth $46 on the high end, while having a very strong dividend yield of 4.17. Clearwater Energy is a very lucrative investment for many growth investors who want a strong dividend attached to their overall growth. They are now focusing on renewable energy, and they also have an attractive dividend because most energy companies do. And for the last 2 consecutive years, they have increased their overall dividends. But even if they stop increasing their dividends, a dividend yield of 4.17 is absolutely phenomenal, and I think that even if they don't decide to increase their dividends anymore, that is still a very strong yield. Next, in our top 3, we're going to have Walgreens Boots Alliance Inc., ticker symbol WBA, and I also want to mention that these companies are not in order. So it's not to say that number 10 is inherently worse than number 3. Honestly, I would say companies such as Coca-Cola, Johnson & Johnson, and Procter Gamble are much better than other companies such as Walgreens. So again, that's just to say that the order of these companies are not necessarily indicating that they are better or worse than the company that comes prior or after them. But back to Walgreens. The ticker symbol is WBA, and it currently trades for around $43, which is their current stock price. The low-end analyst price target is $40, and the high-end price prediction goes as high as $52 per share, and it has a very impressive dividend yield of 4.41 according to Robinhood. Walgreens is a health and beauty retail company that mainly operates through the United States, but it also does have international segments. They sell things such as prescription drugs, retail products, mainly revolving around health and wellness and personal care. And this company has raised its dividend yield over the past 7 years. So hopefully they will continue on this phenomenal trend. Overall, analysts have a neutral rating because the current stock price does tend to trend downward. However, if you are a dividend investor and you want that passive income, then this may be a very good stock for you to at least add to a watch list. Our next company on the list is Realty Income Corporation, ticker symbol O. Now, in my personal opinion, I think there are better companies or real estate investment trusts besides Realty Income, but this is absolutely a staple in many people's portfolio. I don't think this company is bad by any means. I personally own this company, but there are other real estate investments and real estate trusts and REITs that outperform this company in my subjective opinion. Currently, the current stock price for O stock trades for around $69 per share, while analysts deem this company to be worth anywhere between $68 and $86. $6. The current dividend yield for the company at the time of this video is 4.23, and this company is clearly a real estate investment trust that provides their stockholders and shareholders monthly income. And this income is directly dependent on the cash flow that they generate from their around 6,500 real estate properties that the company has bought and owned, and they have consecutively raised their dividends 25 years in a row, to where its current dividend will give you around 24 cents per month per share that you own. And lastly, we're going to talk about Verizon Communications Inc., ticker symbol VZ. The current stock price for the VZ stock trades for $51, while the low-end analyst price target is $44, while the high-end analyst price prediction goes as high as $71, and they offer investors a very strong dividend yield of around 5. Verizon Communications, if you didn't know, is a United States-based multinational telecommunications company, and they are a very active and innovative dividend payer because they have increased their dividend yield over the past 17 years, to the point where Deutsche Bank says this is a phenomenal company to hold. Their overall earnings per share and revenue are pretty good, coming in at around $1.03 for the fourth quarter of 2021, and their revenues came in at around $34.1 billion, and both of these metrics actually beat projections among analysts. So to put this into perspective, they beat on their earnings per share by around 3 cents per share, and they beat on their revenues by around $30.6 million respectively. So those are going to be the top 10 best stocks to buy now and hold forever, not only because they have phenomenal dividends and growth rates, but I think these types of companies, these blue chip companies, should make up the foundation and cornerstone of your portfolio before you start to invest into more risky single stocks such as SoFi Technologies and Palantir Technologies. You need to get your fundamentals down by investing into blue chip dividend stocks, as well as just blue chip stocks in general, as well as ETFs, particularly if the ETF tracks an index such as ticker symbol VOO, which tracks the S&P 500 index. So I would love to hear your thoughts down below and what you're doing to build your wealth during this time of market volatility. Subscribe for more videos like this one, and I'll see you in the next YT video.